trade to make a living, it becomes so difficult. If you trade to make an income month end, it becomes so difficult. This is why we tend to see people start doing account management, start selling signals, selling all these other things to supplement that, right? And I always say this to people, is that trading is not, we must understand what trading is, right? It's an investment tool, right? It's not an income generator tool.
Warren Buffett was once told in the '08 crash, "Mr. Buffett, you've lost $10 million today." Do you know what he said? He said, "I haven't lost anything. I haven't sold." Me and Buffett have the same mindset. I'm tens of thousands in loss on my Euro USD trades, but I haven't lost anything because I haven't closed the trade. No stop loss. We share that mindset, and inshallah, the markets will turn around and I will be profitable. That's the problem with these traders nowadays. Stop losses, closing their trades. Don't close, don't lose.
Exactly.
What is a Palm account in Forex? A Palm simply means percent allocation money management. Account is a smart and hands-free way to earn from Forex trading without trading by yourself. Here's how it works. A professional trader, the manager, opens a Palm account with a Forex broker and starts trading with their own money. Investors like you open your trading account with the same broker that the manager used, fund it and link your funded account to the manager account without handing over your hard-earned money to the manager directly. The manager trades with their money and the system automatically copies those same trades to your investment. When the manager makes a profit, you also earn a profit, minus a small agreed fee, usually around 30%, paid to the manager. Note that the manager does not have direct access to the investor's money. The manager trades using their own funds, while the exchange bot repeats the same transactions for the investor's funds. Example, the manager invests $300, and you invest $200 equals $500 total. After successful trading, the account grows by 200% to $1,500. You now have $600. The manager gets a 30% fee from your $400 profit equals $120. Your final gain, $480. The manager earned $1,020. It's that simple. You keep control of your funds, and you earn based on the manager's skills. At Forex Algotech, we are your #1 trusted Palm account manager. We strongly believe in results, as you can see on our screen over the last 1 year. Join our Palm Partnership community today for free and start earning from the financial world. Get back to whoever shared this video with you, and get started today with us. Thank you for watching.
When you begin, it's always hard to start. It's common that you have high expectations. At first you lose when learning trading art. But don't give up, just try to have some patience. Of course you think that game will be so easy. Such business is as cruel as the rest. Don't let your wins just make your head be dizzy. If stay and trade, result will be the best. I know that every single day you can begin the competition. Get profit with your every trade. Just know that Forex is your mission. Forex is my life. Forex is my life. Some time will pass and you will see the trading is not so hard for those who they're long. There's always one whose help is there waiting. And finally, you'll keep your profits strong. I know that every single day you can begin the competition. Get profit with your every trade. Just know that Forex is your
Yeah, good evening, everyone, and welcome back to another section. Tonight, we are going to continue on our beginners class. Please, if you hear my voice, can you please let me know?
We can hear you.
Oh, thank you very much. Tonight, like we know that on Tuesday we always I mark it for the beginner class, but I'm going to tell us that the beginner class is getting to the level that we are going to make it a little bit more technical. The major thing you need to understand as a beginner, we have treated them. The lot size, what is the lot size, what's the base currency, what's the quote currency, we have done this. But what I'm going to do for majority of us, because not everybody gets things easy to understand. So what I'm going to do is that in the group, I'm going to send what we call Pipsology School, College. Is a manual that I used to teach in the past. It's very comprehensive from the college to, from the beginners level to university level of Forex, okay? Don't consume too much of it so that it doesn't mislead you a bit, because most of the things inside it, I don't even follow them again. I use them when I started my own in those days, okay? But it will give you the basic things that you need to understand. It will be in form of PDF. Please read it. Many people on this platform doesn't read. You just come to this platform to make money, and you can't make money without well informed. So I'm going to drop the test. I mean the book. I mean maybe the manual into the group. Immediately we complete the class tonight. So tonight we're going to move a little bit up to start understand what type of trader that you want to mentor you. What kind of person that you want to mentor you? What is my own ideology of trading? You know, I won't lie to you. Many people doesn't like my ideology of trading. Many people always criticize me. But I believe one thing that I've been working on for a very long time, and I've been using that have been working for me, and that is very simple thing. I don't follow crowd. I don't follow crowd, and I will tell you the reason why I don't follow crowd. It's just I might be wrong, because nobody can know everything in life. I might be wrong. I have many people that are better than me in trading, that I can tell you. But I can tell you that I'm one of the few that can say at the end of the year, I make money out of Forex markets. Why I don't follow crowd is that most time crowds are stupid people. Crowds are very stupid people. Because crowd believe in common thing. You understand? And when you see, even when you look at this world, you see that it's few people that reserve themselves, that believe opposite of what crowd believe. They are the most successful people in the world. That's why you can never see the number of the rich people that will be equated to the number of poor people. According to statistics, rich people in every area, they are not more than 5% of the community. Then the question is, why are the few 5% are richer than 95% of people? Because 95% of people are stupid. They believe in stupid things. They believe in what they were told, and those things are very sweet and very easy, and that's what everybody will run up. And let's go to one of the religious book. I don't have a religion, so you have to know that. I don't patronize any religion. I just patronize humanity. So, but let me make a reference to that book. That book said, the narrow is the way to the maybe to the Lord or to the heaven or whatever, and the broad way is to the where people will perish. So that's another thing. So as a beginner, I want you to one, when you are starting with me, please avoid to go to YouTube to go and learn. Do everything to avoid to go to YouTube to go and learn anything. Apart from my own YouTube channel that go along with what I'm teaching you. Because if you go to other YouTube, you are going to be messed up. I can promise you that. Because let me tell you, in the industry, a few people that knows me, they call me a controversial Forex trader. You know, when they say somebody is controversial, that means somebody who doesn't follow what other people follow. And the problem is, maybe, let me say, but the good thing is, I have years of results. People that follow what people follow, they don't have results. So most time, some of them still come back to me. Most of them are my friends. We are colleagues in the industry. So they normally call me controversial Forex trader because whatever thing they tell me this, I will say no, I will do the opposite. And the opposite always fetch me because I'm a researcher. I don't believe in what people tells me. I believe in what I work on, my own personal research that gave me money, that gave me results. Let me put it that way. So if you are following me as a beginner, just know that you are following a controversial Forex trading or a Forex trader mentor. A mentor that what he will be telling you, you will not see it easily or you will not even see it at all. But if you follow all those principles, you are going to benefit from them grossly. So I'll send you the PDF. Please learn to read. Read it to a particular level of, I think it's a nursery level or primary level or college level. And immediately you reach the college level, just stop, don't read it anymore. Because that books, I read it a lot and it messed up my life a lot. It messed up my life a lot. I have to reprogram my brain to become what I am today. Because a lot of things inside it would never work. It would never work, no matter how many hours of the day, whatever you spend on it. So I will look at it myself and I'll post in the group where you should stop studying that book. It's a Forex book, very good book, but where you are going to stop learning, I would send it to the group page, wherever. After you reach that page, don't study that book again, just keep it in your archive, because it's going to mess up your understanding of what I will start teaching you from tonight onward. So tonight we are just going to do preamble of it and we close. Okay, so now I'm going to change my stuff to my whiteboard. We are going to use whiteboard throughout. Maybe in the next 30-45 minutes we need to call it a day, because I'm going to introduce to you. I won't exhaust you on it. I will just introduce it to you so that you look at it and you see what you need to have a question about. Then we call it a day. Okay, so let's move to my screen. Okay, please, if you see my screen, can you please tell me?
Yes, we can see it.
All right, thank you. So in Forex industry, everybody have his own strategy, everybody have his own way of doing things. Okay? But in my own way, I have only 4 methods I use to trade. And I can assure you, if you stick to those 4 methods, you will never regret the day you know me, sign up with my classes, for my mentorship program, you will never regret it. Because I can tell you boldly that for the past 16 years, I've not blown my account. For the past 16, I've not blown my account. I'm telling you the truth, not lies. But I cannot guarantee you profit. But I can guarantee you, you cannot blow your account. That is if you follow my instruction, you follow everything according to the way I'm showing it to you. I don't hide anything away from anybody. So we are going to talk, I'm going to name them and I will explain them in a very liberal way. And we call the class close. Next Tuesday, we move to a little bit practical of it, where I'm going to explain, maybe using some few charts. And from there, we move to the main class. So the beginner class is going to put on hold because there's nothing to begin again. Once I cover those areas, you can move with the professionals that have been using it for over a year. Okay. What my strategy is called hedging. Hedging. Why do we call it hedging? Hedging, we can give it a different definition, but the most important thing is hedging, and hedging have different approach. Again, it have different approach. After this class, you can go and read more on Google. You can Google what is hedging in trading forex. It will elaborate it for you. But the one Google will give you might not relate with mine straight away, okay? But to give you a light on it. Why do we use hedging? We use hedging to eliminate stop loss. Sorry. That's the main reason why hedge trader normally use hedging. Because we don't want to use stop loss. Stop loss is a scam. If you are trading, you are using stop loss. Stop loss is just like a candle. It's like a candle that at a point in time, you see, candle can take 1 month to burn, but the most important thing is going to burn to the bottom. That is how stop loss works. It's going to be reducing your capital bit by bit until your capital is completely finished. That is why I don't use stop loss. I stopped using stop loss 16 years ago. And that's when I started seeing results in my trading. So, and how can we use stop loss? Stop loss, I mean, hedging. Hedging is not easy. Hedging needs a thinker, strong thinker, a trader that can think. Because when hedge comes, to solve the puzzle can take you between 1 day to several years. Can you imagine if you open one account and for years you cannot solve the problem? But that's where somebody like me, I'm there. Sometimes you share with something to your difficulties with me. We look at it together, and by doing so, we can reduce the number of days, weeks, months, and year that you can solve it. But eradicate using stop loss completely. No matter how tough it is, no matter how long it is, if you are hedging, you are going to recover your capital back. You can't lose it. So that's the importance of hedging over stop loss, okay? So now, hedging as a component that we use for is trade management. trade management. Trade management is a key. Please, guys, if you are using my software or you buy any software from any programmer or any trader, or they told you that they brought the software from Canada, Australia, UK, you know, black people will normally like things that belongs to white. Or even they said they brought it, one prophet bring it from heaven. Let me tell you something, including my own software. No matter how good that software is, if you're not good on trade management, that is number one. Number two, risk management. That software is going to blow your account, including my own software too. Mine is not exception. You have to be as good as anything in these two areas of trading before you can survive any turbulence in the market. You have to be good in trade management and risk management. The English might be so long, it might look so big, but it's very easy. Don't scared. Don't be scared. Risk management, trade management is very, very easy thing to understand along the way. Okay? And trade management, computer can, let me say risk management, the software, our software already have inbuilt risk management. It has already have inbuilt risk management, but there will be a point that risk management will not be able to hold our account. And that is when the robots normally end up to hedge our trade. And immediately hedge our trade, we start trade management by ourselves. So once you understand this, I can't promise you profit. Profits depend on how intelligent you are, but I can promise you, I can guarantee you that you can never blow your account. So now let's visit what my strategy entails, what is inside my strategy that we need to break down for you to know each one of them. One, we hedge. Two, we do the dollar cost average. Three, we martingale. 4, we learn to trade. In our trading, we have two types of trading. One is FIFO. We have three types, sorry. One is FIFO. Method. One is LIFO method. And the third one is random. That is under our trimming when we want to trim. Five. We have price zone management. 6. You have rollover. Please, guys, if you can focus on these 6 things, you hardly blow account again. You hardly I mean it, to blow account ever again. If you can master all these 6, and all these 6, theoretically, I'm going to explain them to you. We go to practical where we are not going to trade. I will explain it to you. Then we go to trading where you are going to be implemented by yourself. Okay. So let's look at the first one. First one is hedging. Let's say you are buying in the market, and market is going against you. And we can use hedging for emergency protection, and we can use it as inbuilt protection. But let me tell you, if you use hedging as emergency protection, there are other probability that you are going to fail. Because now you are in panic mode and you want hedging to rescue you. But if you have hedging as inbuilt security, probability that you are going to be winning every time is high. It's higher than using it as emergency rescue. So when you are hedging, that means you can buy and sell at the same time. But our strategy is not like this. So our own strategy is we are buying and we are waiting for a particular risk level. Then when that risk level comes, we start selling. We hedge with selling. And buying and selling, combination of these two is what we call hedging. So you hedge your trade. When you combine that two, we hedge our trades. That's number one, okay? Number two is dollar cost average. We call it DCA. How does dollar cost average works? It works in a way that let's say, I normally use stock to make the example. So let's quickly use stock to make the example again. Let's say on Monday, I'm going to use Monday, Tuesday, Wednesday, Thursday, and Friday, okay? And I'm going to use assets, small asset like, let's say we want to buy a stock like MTN. We want to buy this stock. Okay. MTN, don't mind me. And on Monday, we go to the market. The stock market is telling us that MTN price is $5 per share. We quickly buy it. We quickly bought it. And we anticipated that the price will start giving us profit. And unfortunately, on Tuesday, the price dropped to, let's say we buy $10 worth of the stock on Monday, $10, okay? On Tuesday, the price fell to $4. We are not making money. On Tuesday, we have lost $1 of our investment. So what we are going to do now is we are going to say, okay, the price has come down. Let me buy more. So when you buy $20 here on Tuesday, so you now say, okay, maybe buy more Wednesday, the price will shoot up again. Your everything will be at profit. But unfortunately, on Wednesday, you went back to the market. MTN became $3. What do? You buy more on Wednesday, or you buy more, maybe you buy $30 of it. On Thursday, you went to the market, MTN became $2, keep on dropping. And what do you do here? You buy more, maybe you buy around $50 here. On Friday, you went to market, MTN fell again to become $1. What do? You buy more, maybe $80 MTN. You don't buy another asset. You buy the same asset at different prices with more quantity. You see? 10, 20. And if you look at $20, will buy more because the price has become $4. And $30 will buy more. The price has become, because if you look at it here, if you put $10 here, that means $10 will buy, and the price is $5, will buy 2 stocks. Let me see if I can include that. We are going to buy 2 shares on Monday. On Tuesday is $4. I want to buy $20. How many shares are we going to buy here with $20? Anybody?
5.
Good.
5.
We buy 5 shares. And here we buy 10 shares. Excuse me. And here we buy like 25 shares. The more the price is dropping, the more we buy, and the more we buy quantity and more cheaper. And here we're going to buy 80 shares because it's at $1. Okay. Now, all this is what we call dollar cost average. Dollar cost average. That means the more the dollar price is changing, the more we are buying more at a double price. We double our investments. We double our odds. We double our stakes. You understand? So what we do here, what we did here, sorry. Let me do, can I do, okay. What we did here is the change in price is what we call dollar cost. Approach we are using is what you call martingale. This one is like 2-in-1. Let me put it like this. All this change in price, you can tag it as DCA. And all this is our martingale. Why do we call it martingale? Anyone in the class? Okay, we call it martingale because we are doubling our odds. We are doubling our investments. Martingale is the name of a person that gets all this formula. Martingale, if you go to Google after the class, you will see he's a mathematician. I forgot the other name, but it's called martingale. This strategy is what people hate most in forex trading, but they will tell you that it's most high risk strategy in forex. In fact, some people, when they ask me what strategy is your robot is using, once I say martingale, they say, no, I'm not buying. Because you see, the problem is they don't know how to manage martingale. They don't have the knowledge and they don't want to learn. Because they're supposed to learn, they don't supposed to run away. Okay? What did martingale teach us? Martingale said that when you bet and you lose, you double your odds and bet again. When you lose, you double it again and bet again. But because you keep on betting double, your account can be blown off. Your account can wipe off. But in our situation, why our account cannot wipe off is because at a point in time, at a particular risk, we edge it. In like people that we that were trading active funding, we edge it at 2.5. So this is where people doesn't understand why I still use edging martingale tomorrow. In fact, the end of the world, I can't use any other strategy apart from I'm a statistician myself by education, and I know what martingale means. It's great gambler that normally use it. A very intelligent gambler, the martingale, when they go to casino. So it's very good strategy, but you must understand what can you use to protect your account when you're using martingale. What we use on our robot and when we are trading AXI, we use 2.5% to edge, and martingale we stop the martingale. We just start managing the edging. Okay, so if you look at what I did here now with dollar cost average, I've used it to explain martingale. So I won't talk about martingale again because martingale is doubling of the odds while betting. You see, we double it. We double it from 10, 20, 30, 50, and so on and so forth. So we have done 1, 2, we have done 3, then we are going to go to 4. Our 4 is streaming. Streaming. Now, when we started trading and we use dollar cost average, we use martingale, and everything locked itself up along the way. Everything locked itself up, then we start streaming. Can somebody tell me in normal basic English, what do you understand by the word streaming? In just basic English, what do we understand by trimming, the word trimming? Anybody in the house? I know I've seen a lot of people that speak a lot of grammar in the class. Anel speak grammars very well. Who else? Raina speak grammars in the class. Please, who can? Okay, Edao 7, you raise up your hand.
Yes, sir. Good evening, sir. Trimming is trimming off, like cutting off excess.
Cutting off excess. That's just a plain English. That's it. Cutting off the excess. Thank you, Edao 7. When we are trimming, we cut excess. For example, many of us have been using trimming even without our beginner class. Okay, let's put it like this. For example, if you're buying, there's a way I should be able to change this column. I don't know. Okay, let me just keep on doing what I'm doing. Okay, yeah, I know there should be a way to change this color. Okay. Let's say our buy, I'd like to use green color for buy, is equal to $40. And our sell is equal to, where can I put it? How can I put it? No, I didn't put it right. Okay, let me say our sell is equal to, I don't want to call it, I don't want to do that. This should be minus one. Okay, let's say our sell is equal to minus $70 at let me put it this way. I just want to improvify, what do you call it, to match what I want to explain at 3 lot size. 3 lot size, okay? And our buy, okay, our buy is $40 at any lot size. This one we don't care about this. Let's say at 3 lot size as well. If you are trading, and we remember we say when we hedge, that means we are buying and selling at the same time. We are buying and selling at the same time. This illustration shows that hedge has took place. Okay? Hedge has took place. So we want to trim. We want to trim. So now what we need to do is that if you look at buy as $40 at whatever lot size, we don't care about the one that have positive, okay? But the one that have negative, we need to care about it. Okay, now we want to now see, instead of keeping this like this, we want to close our buy at profit and our sell. We can't close everything. We must close something that is little below 40 so that you can keep small profits. You can keep small profits. Now, what do we do? If we divide 70 by 3, what will it give us? We want to divide amount by the lot size. If you divide 70 by 3, anybody in the house? Yes.
23.333.
23.333. 23.333. Now, how many 23.333 can we see in 40?
One.
Thank you very much, sir. One. Yeah, when mathematician in the house, but this thing is we need mathematics. We need mathematics. So now we assume that we have closed our buy at $40 profit, and we cannot just close our buy and leave minus 70 there to be growing. We have to close 23.33, one lot size, because remember we divide 70 by 3. Each one of them give us 2.33, I mean 23.33, 23.33, 23.33. Let me help people that hate maths, because when we are in school, many of us hate maths. So 3 lot size. Each 23.33. You understand? So 23.33 times 3 will give us 70 back. So now we have closed $40 profit, okay? Now we can only have one 23.33 in 70. I mean in 40 rather, in $40. So now what we're going to do now is we are going to trim sell. We are going to trim the sell. And now when we trim the sell will become sell equal to minus dollar. 70 minus 23.33, guys. 70 minus 23.33.
26.666.
26.666. Okay. At
No, sorry. 46, sorry. 46.666.
So at 2 lots, that is what will be left on our chart, on our trading, because we have closed 23.33. Now, on our profit side, now, we are on our profit side, P&L, profit and loss. We are going to have $40 minus, because $40 is pure profit, minus this 23 will be 23.33. $40 minus 23.33, what is it going to give us?
$16.66.
Thank you, sir. So now, this is a profit we kept from this trade. And remember, we don't have buy anymore. And our sell has moved from minus 70 at 3 lot size because we closed 1 lot size. Oh, sorry. Because we closed 1 lot size, we close this 1 lot size, and our lot size will become 2. And our negative will move from minus 70 to minus 46.66. That is trimming. We have trimmed the account. But you must not trim at loss. That is trimming. And we didn't trim at loss because 40 minus 23, we still have $16, $66 as our profit. Very simple, guys. Very, very simple. You just have to prepare your mind to learn and practice on your own. This is what called trimming. This is trimming generally. We can't talk about trimming by FIVO, trimming by LIFO, trimming by random tonight. That will be our next class. But generally, what is trimming is what we have spoken about tonight. That's what we have spoken about tonight. Okay, now let's move to the number 5 or so. Our number 5 is price zone management. Okay, guys, the best trading strategy I know in my life is what I'm giving to you, everybody, on a platter of gold. And the reason why I know that I'm teaching what is right is 5 people have called me. 5, 1, 2, 3, 4, 5 people have called me. They don't know me. They are not in my class. They don't use my software. And they call me that they pass Agile Select Seed. 5. I posted some of their comments in the group some times ago. And I'm asking them, how did you pass? They said, as at this night, I have 290 something videos. They said they watch all my video on YouTube and they apply it and they pass. Can you imagine? Go and look at every YouTube. 99% of YouTube, they will just be teaching you theoretical thing that doesn't make sense. But if you go to my YouTube, I teach with money. And that's why those people have confidence, because they see that I always teach my class with real cash, real money. And they apply it. And they got to seed. I think 2 of them called me that they need to come and buy the software because now it became a little bit tougher. And I was saying that, okay, it's fine. Anytime they are ready. And they don't understand how Agile works, which is one thing we teach in our class here also. Anne Taylor, you raise up your hand. Eda 07, drop your hand. Anne, let me listen to you.
Sorry, I think you moved from DCA, but I just have a quick question on that one, if I may.
Yeah, but why didn't you say something when we are there? Now
I was searching for the raising of the hand. Sorry.
Okay. Go on.
Yes. Okay, we trimmed it, and then the profit was taken, and then it left a loss of, I think, 40 something.
No, it's not a loss. You can't call that one loss.
Sorry, not a loss, a sell with a negative.
Yeah, it's a floating, we call it floating loss. You put floating in forex.
Floating loss.
Yeah.
Okay. Do we hedge it again or what? I mean, do we leave it like that?
No, the reason why we cannot talk further, you remember that this is a beginner's class. We are just telling them the meaning of trimming. So the question you are asking now should be on Friday class.
Okay.
You know, we don't want to remember that when a woman gives birth to a child, you start from milk food. I don't know. I don't know in Namibia. Do you start with milk or you start with a pap and steak? Hello?
No, we start with milk.
You start with milk. Okay. You know, we have different tribes on the platform.
You start with meat.
We start with milk.
You see, because we have to start with milk. Otherwise, we choke these kids with a pap and steak. We are going to kill these kids. So we just want to tell them the definition by practical. Definition of trimming, definition of hedging, definition of dollar cost average, definition of martingale. We don't want to move to application immediately. So most of them that are in the class now, they know, oh, this is trimming. They might have not heard about it before. Oh, this is trimming. And unfortunately, that if you go online and go and search trimming in forex, I don't think you will get answer, because I developed this thing myself, and I've not done something on it that can make it rank on Google, because everything you see on Google is somebody's information that they try to use SEO to upload it somewhere, and artificial intelligence will start picking it as a solution for people to are searching. But I don't know, because all these things I developed them myself, so I've not run them in the Google. So you may not see it. You may not see it, but maybe I will test after the class anyway. I will test it myself. Just put a prompt: trimming in forex. What is trimming in forex? Put it in a prompt, and let's see. Maybe we'll get a solution in the next class. Anybody that tested it should let us know in the next class. But Alan, we are giving them definition by application of small arithmetics for now. So when we keep on moving on, then that question you ask, or you ask that question on Friday class, then I'll be able to quickly give you the solution. I think we're on the same page, Alan.
Understand.
Good.
On the same page.
All right. Thank you, my darling.
Thank you.
Sure. So let's move to price zone management, which is number 4. Number 5, rather. Number 5, price zone management. Number 5. Price zone management. Price zone management is what we are using demand and supply zone. Demand and supply zone to look at it. Where is this thing going? Can I get a trust at this level? Can I wait at this level? Can I put pending order at this level? Can I put set stop at this level? I don't know how I'm going to explain that, but let's first of all explain supply zone. We are going to explain 2 of them for our beginners so that they understand what is the concept we use to manage our. We have a lot of things to do. Price zone management is part of our trade management. Okay, it's part of our trade management. So is one of the tools we use to manage our trades when they edge. But if they don't edge, we are still going to be enjoying and be doing whatever thing we want to do. So the way we can explain this zone is a place where market reacts, where price reacts. For example, let's say I'm using my finger, so so it will be a little bit thicker. Don't worry. Let's say this is a candle. It's keep on going up, and immediately it reach that place, it turn back, keep on coming down, Immediately it reach here, it turn back, keep on going up, and immediately it reach there, it turn back, keep on coming down. Now, this place are where price are reacted. So we are now calling them zone. So this one is zone, price zone. This one is price zone also. Okay. We call this green one demand zone. And we call the red one supply zone. Right? Okay. Now, if you look at these two different zones, one is at the top, one at the bottom. The one at the bottom, which is the demand zone, is the one holding price not to fall. And the supply zone is making price not to rise. They can be broken by any forces in the market, forces like news, especially news can break them, but they don't easily get broken if it's a very solid level that is on a multi-time frame level. They don't usually, 70 to 80% of the time, they hold the price on that level. You understand? So those area is what we call zone, price zone. Supply zone is where we normally look at opportunities for price to come down. So we start selling. Demand zone is where we normally look at opportunity to buy, because we are now thinking that the price will rise, because that area will keep the price not to fall. And when somebody keep something not to fall, that thing want to make it rise. And the supply zone is where is a zone where it kept the market price not to increase and it will be decreasing. So we're going to look for opportunity to sell. So in this zone, we have two rules. On supply zone, never buy to supply. That means anytime price move closer to the supply, don't ever look for buying opportunity. Never buy into supply. And demand, never sell into demand. That means anytime price come near this zone, never sell again. Look for opportunity to buy. These two law or these two rules is a very best rules that you must not violate as a supply and demand trader. You must not violate them. So this is how we manage price zone. This is how we manage price zone, which is our fifth stuff we need to discuss tonight. So let's go to the last one. Rollover. Rollover is the last one, number 6. Rollover is what is very, very, very difficult for all our traders. The only person that is very easy for is only me, because I'm the one that created it. Or everybody that have been trading on my platform, I always force them to roll over. It's not easy to lose. It's not easy to give money back to the markets. What is rollover? Rollover is a process by which you take part of your profit, you throw it back to the market to reduce the risk on your account. I didn't say all your profit, part of your profit. For example, let's say you trade from October 1st to today, which is November. I think today is 11th. And you make 8% return over investment. Let's say you are trading with $1,000. Okay? And you have a float of minus $200. Now, can somebody tell me what your balance will be? Anybody in the class? Your balance? What will be your balance? What will be your equity? These are float.
$800.
Okay, $800 would be our equity, right?
Yes.
Yeah, thank you, sir. Can you tell the class how you get 800? 800 is right, but to carry our beginners along with us.
200 is float. 200 when it's float is it's taken as a loss, especially with a minus in float. Then we remove 200 from 1,000.
Yeah. You're right, sir.
Yeah.
Can somebody tell us our balance? These are float. Who will tell us our balance?
It's 800. Oh, which balance?
Our balance cannot be 800. Equity is 800. Float is minus 200. What will be
our balance? Our balance will still be 1,000.
Never. We have traded from October to November 11th, and we have made 8% profit. What is our balance?
Oh, sorry. It will be 1,080.
1,080. $1,080. Thank you, sir. 8% of 100, 8% of 1,000 is $80. So we add 8% to 1,000 equals a balance, and we have this, we have this. Okay. Now, in our situation, what do we want to do with $80 when we have this float? We need to roll over. Roll over is see, I'm begging you in the name of whatever thing that everybody believes in. Always have an investment mindset when you are trading Forex. If you want to be successful, you see this $80. It's not your money. Your money is $1,000. This is what the market blesses you with. Don't let it be so difficult for you to use it to solve your problem. This is what you're supposed to be protecting every time. Your money. Many people run after this profit until they blow away their account. Can you imagine? They blow away their account because of $80. You know how stupid it will look for you to now release 1,000 to the market because you got $80. At the end of the day, you let that 1,000 gone, $80 is gone. Broker took the $80, then you come back with empty wallet. So what are the importance of rollover is that I make 8% in a month. Do I need this 8%? No. Okay, let me say, okay, out of 8%, I want to divide it by 2. When you divide this 8% by 2, it's going to be $80 divided by 2. That's $40, okay? Okay, what I'm going to do is that I'm going to use $40 to reduce my float by closing some position that is on, and our float will come back to minus $160 from 200, and our balance will become $140. You still keep this $40, but the $40 you took from here, you have make sure that you have reduced risk, and your money has become negative $160, and you keep on trading. And at the end of November, you make 80% again, and when you make 80% again, you are closer to December, your capital will become $1,120. You can still say, no, I don't need $120 because I still have a float. I want to reduce this float so I can reduce pressure on my money. So you can take $40 again and remove and this place become $120. Bit by bit, you are going to take it off, and by the time you come back, your equity has already grown back to maybe 1,100 in 2 months, or 1,800 in 2 months. You got 8% in 2 months. Each month, 4%, 4%. That is what we use rollover for. But a lot of traders, they don't want to give this money back. They want to keep on struggling. They want to keep on struggling. Ola Williams, you are disturbing my class. I'm going to remove you. So you don't mute, and you have a noisy background. So that's why we created. That's why we created the rollover strategy. Ola Williams will come next week. So that is why we created a rollover strategy. And this strategy is not common from traders to traders. You may not even see it if you Google it. But it's a very, very one of the risk management tools that I use to trade. When you make $5 and you have a problem of $10, take $2.50 to go and solve the problem of that $10, and you reduce that $10 minus $10 to become minus $7.50. And you keep on working, you make profit, you accumulate a little profit, you go and reduce that $7.50, you reduce it back to $6. Go and work. And when you are doing that, and you are doing your price zone management properly, your equity is going up, your float is coming down, and you take risk away from your account. I always fight anybody. Up to now, when I go to one-on-one, I'll be asked why you don't want to do rollover. Say, I think I will. Let me try again. Let me try. Maybe I will make more profit. They don't want to give it out. And market is give and take. If you refuse to give market will take it by force. And by the time you take it by force, the result will not be palatable. Your capital is going. So it's better you give what belongs to Caesar at the right time. So we have discussed the 6 strategies that we are going to be using henceforth in our class. And this is where I'm going to stop the class tonight. Please, if you have a question, I'll give like 3 or 4 people access to ask question. And please, when you raise up your hand, all your questions must be asked at once. Once you drop your hand, you can't ask any question again today. You can ask next week or Friday. So please, guys, any questions so far? Do we have questions? Esther? Do we have questions? Right now? Any question? Mr. Babs, what is your question, sir? What is your question, Mr. Bout?
Hello, sir.
Hello?
Yeah, can you hear me?
I'm hearing you clearly.
Okay, yes. I just wanted to, you mentioned that you'll be sending a book to us.
I'll send it
And
immediately I
you
finish
said,
from
no,
the
no,
class.
I want to make a comment. You said not everything might work there and everything. Yeah, I was thinking, is it not better we just focus on what you have tried and it's working and we...
No, there's some things that
why?
you know some basic things like one lot size. What does it mean? I still use it. I cannot castigate all those ones. So all those ones you
Okay.
still people. So what I'll do is when I send it, I will put a comment that stop at this chapter.
Okay.
But there's
That's
some
what I
chapter
just wanted to
there's some chapter that you
comment
still
on.
people still need, beginners still need to understand what is the meaning of that. Now we are talking about 8% float, equity, balance. Some of us are even trading because we are using robot. We don't know all those things,
Yes.
And those
That's
things
true.
are very important for us to know as a trader.
Okay. Thank you.
Yes, sir. Another person? Any other person? Okay, I can see that when it comes to asking questions, many people doesn't want to ask. Let me check if we see some people dropping messages. Okay, nobody's drop message. Okay, at this junction, we call it a day. Until we meet again on Friday, I will say all of us, I wish all of us a blessed night and good night, everyone. Bye.
Good night. Thank you, sir.
Yeah, good night.
Good night, sir.
Good night, sir.